All right, so we've covered what is a fiscal year and the basics of the charitable tax regime in terms of who qualifies, how you qualify, what you need. Now, recall the difference between a tax deduction versus a tax credit, right? A tax deduction is something that reduces your taxable income, which you then apply your tax rate to, then you get your taxes payable. A tax credit directly reduces your taxes payable. So now we can launch right into the difference between the tax benefits that you get for giving charitable donations as an individual versus a corporation. So as an individual, on the first $200 of charitable donations, you get a 15% non-refundable tax credit. Then over $200, it goes up to 29%. So the advantage gets bigger the more you give. Now, that means that what is a non-refundable tax credit? Well, it's a tax credit, which directly reduces your tax payable, but you have to be able to use it. So what a non-refundable tax credit is if you have had enough tax credits already that have reduced your taxes to zero, then you can't use it. You don't get a check in the mail, and you can't deduct those donation amounts or the benefits. So you have 5 years with which you could carry that benefit forward. And just as we said, you get a bigger benefit the more you give, you can actually pool. So you can wait a few years, claim all your donations together if that makes sense for you, and then potentially get a larger benefit. Or you can pool it with a spouse, for example, and get a larger benefit. Definitely ask an accountant or a professional to help make those decisions. So if we move on to a corporation gets a tax deduction. And so it's as valuable as the corporate tax rate is because it's reducing the taxable income for the corporation upon which the tax rate is applied to determine the taxes payable. Now, does it make more sense to give personally, individually, or through a corporation? Well, that depends on a few things. It depends on where the money is. For example, if your cash is in your corporation, it might make more sense to give it through your corporation versus if the money is in your hands personally. But what it also depends on, and remember that if you're going to have to take money, like if your money is in your corporation, but you want to give it personally, you're going to have to take the money out of your corporation into your hands personally in order to donate it, and you're going to have to pay tax on that money. So a second factor to consider when deciding whether to donate through your corporation or personally is what your personal tax rate is, because that will make a difference in terms of the impact. Now, all of this is to say that there are benefits. Definitely consult with a professional. Giving is a really worthwhile thing to do regardless of the tax benefits, but doing it in an organized and informed manner makes a difference. And so in the next video, I'm going to cover the different strategic ways to do your philanthropy, to give, because as I said, I love strategy and value creation. And if you're going to do it well. Thank you.